That was loud. All right. But I have found out the less I'm trading, the better I'm trading. I mean, it's crazy to say those things out loud, and like, because that's one of those things. Like, even the less that I'm in the market, when I do analyze the market, I see more things than I would have if I'm doing it like an everyday type of deal. I think some of my best trading happens on Tuesday and Wednesday, and then I start fading towards the end of the week. Um, and Monday has not been a good trading day. I think in the past maybe month and a half or so. Not for sure if that's like school related, where I'm kind of getting ready for the week or whatever. I just feel like Tuesday and Wednesdays are my days right now that are pretty solid, and then the rest of it, I'm like, if I get to, I get to. Which is again, it's kind of a relieving feeling. So it's one of those things like I don't have to do it every day. Um, and Jeremy said, when trading becomes boring, that's when you're doing it right, I guess. So I think I'm close to being there. Nice little pennant pattern holding out right here. So not really for sure exactly where we're going to go. I'm going to rely on the Monday range and these little, areas of interest right in here, the 21 on the 4 hours down below the median. So really just going to be focused on the Monday range that was established yesterday. Um, this buy side liquidity is still there. We do have, some extra we could throw up there if we wanted to. Last week, I think I pointed out this guy up here. This is where I believe price is headed, um, possibly even this week. I know it's non-farm, so it could get crazy after today. But I've been really, I guess, the news has definitely gone opposite of the way I wanted the market to go. I think that's another reason why I've shied away a little bit more, just to kind of get with less trades and less looking at the market constantly, just to try and see what that news will do, get a better handle on it. So um, Friday afternoon, we had this huge drop and then kind of small recovery, come back down, retested it for the Monday low, and then established the Monday high up here. So we're really working in that larger range, as you can see this. And like I said, it's kind of a pennant pattern. So if you draw a line right here and a line right there, I mean, it's pretty perfect. So we're getting to the point to where we're going to have to make a decision on which way to go. Everything looks like it's, to me, headed up, but there's no reason why we couldn't falsely break to the downside and then go up. So we're just kind of in that area where we're about 50% of this range, and it hasn't really made a decision. So overall, in the higher time frames, I have no idea where it's going. I want it to go up here, and I do believe that we're still bullish. I do believe that we're not going to see this, at least right now. So I feel like if there is a drop, we're going to hold somewhere in this range, maybe get to the low. Maybe get to the low, but I would like to see it hold out around the 21 and the median, and then kind of bounce from there today. There's really no news driving it today. We have jolts. Jolts can, hasn't really done much lately. So it's one of those things like I don't know if it's going to produce a good move. And it's 30 minutes after open. So at open, we could see whatever move that we're going to get, and then news, and then possibly the move that we will get continued. So I think just looking at it that way, I think that's the way I think the market's going to kind of play out. And it's just a matter of being patient. Go to the ES. Definitely not as bullish. as the NQ. So, but it looks like we're kind of hanging on to the mean threshold of this right here, which is pretty solid. Structure just below it. I like this to push. I know we're below the 21, but I like this to get back to the open. It's funny how this is different than, oh man, my bad, guys. Did not mean to do that. There we go. See my screen now? Again. All right. Trying to hit this little box right there so I can side by side this with the NQ. I do like this little pattern right here down there. I don't mind this drop, taking out that liquidity. We hit some structure, mean threshold. This is bullish. So zooming in on the 1 hour. You can drop it on the 1 hour here too. Get the opening gap there. Kind of playing with, but I think we're going to push through it. See the structure right here. Produce that low and then pulled away from it. That's kind of the one we're reacting to right now. We get through that. Yeah, we're coming to the high. Coming to the high. I'm going to take that off. Monday highs right there at it. So we got some inefficiency just above that on the 1 hour. Right in here. And then buy side liquidity up here. Yeah. Yeah, I like that to continue. Let's drop this back out. Get a better view. Still in the ES. I mean, I really do like the fact that we've dropped below here and the structure tapped and then came back up. I do. They get some liquidity that is grabbed, and we have more reason to go north now. So this should be some lower resistance once we get above this area. Draw a trend line on that. Looks like we're breaking out of it. $15-minute. No real inefficiency left. It came back into this order block right there. Didn't quite make it to the 50% part of it, but still jumped into it. Yeah, I want to see this push. Get some liquidity built up there. Should be no reason why I don't. But overall, I still think this is the area to be looking for this week, even before the news. The numbers that we've been seeing in the news have been pretty mixed lately, right? And I haven't really listened to any of the speeches from Powell or anything like that, like telling us like if things are good, bad, neutral. I would assume He's saying okay things about the dollar, but let's jump into the dollar. Speaking of, just still pushing. Man, I've been calling this to be weak, and it just keeps going. Right, been saying stuff about this being weak this whole time. Looks like we might be coming up into here. Hang on a second, guys. Sorry. Something similar to what we're seeing on the NQ and ES. I'm gonna make this no. Buy side. There we go. Looks like it could be something we're reaching for. This is very bullish looking. No worries. I agree, Chris. That's basically the rhetoric. Like wait and see mode. We're gonna pause it, but we're not gonna take it off the table. But we're not gonna use it. But it's there if we need it. Everything's looking okay enough to not jump the gun. Like, yeah, that's kind of the rhetoric that I've been noticing as well. Morning, Pat. No worries on being late, my man. Yeah, I think yesterday him and Harker were speaking, and they were talking about focus on the labor market, but it's talking about achieving a good labor market for a sustained period or something like that. I didn't really push into the article itself. Yeah, said seeking strong labor market over a sustained period. So I mean that's a hint at if the numbers are good today, yay. If not, to the downside. Yeah. But this dollar right here is pretty strong, which does not give me confidence in what I'm looking at here. I just feel like this is a good consolidation. We've come back down. We've grabbed some liquidity. I just feel like this is going to go. And don't get me wrong, the dollar's in a high spot right here, so we could get a pullback, which could lend for a bullish day. But which overall in the markets, and just I feel like liquidity here and some areas of inefficiency above way better than what's below us. I feel like we should be coming up. And I've been saying since down in here that I didn't like this run for the dollar, but apparently the dollar, it just won't listen to me. So, but I do like, I mean, if I'm, basing trades off of what the dollar is doing, then possibly a little pullback into that inefficiency. Look for where the 21 is going to be, that average, and and then a continuation. You also have a nice little move right here that could easily give you a bounce. So every pullback from the dollar has been pushed back up and then some. I mean, gains have been made after those pullbacks. So um, even, this, a drop, consolidation, and then a go. Like, we're not consolidating and then dropping down further. Like, so that's I just, keeps telling me that the dollar's continuing to be stronger than what I give it credit for. So we do have buy side in the sights right now, though, not too far ahead. So if we do end up getting a little bit of a drop down today, maybe a bearish day on the dollar, even with jolts probably gives us this nice candle for the day, stays inside a range, and then tomorrow we see what ended up happening right before non-farm. So, but yeah, I don't. With the dollar being as strong as it is, it's not that I don't trust the movement that I see in the market or what I'd like to see in the market. It's just that it does not lend too much confidence. Yeah, I'm at a lower low. Need to get through this area right here on the Dow, that median. We push, then we can see a nice move. Probably a very low resistance move up. We got to get through this area. But for the most part, I'm just waiting, like, to let the market show me exactly what's happening, especially even in my trades. So we drop down to lower time frames. Yeah, I'm wanting to see the market move significantly in a direction that I'm comfortable with, and then finding a reason to get in. So on a 15-minute chart, we start breaking above these areas. We start looking for a pullback into something that's appealing. instead of trying to play something in here to go up, waiting for it to give you that, and then based off of that, you can take your trade. And I would like to see good displacement up in here and then a pull back into it and then a go. This is on the Dow, but that's on all of them, right? I know Apex got a 90% off sale. It's a couple more days left. I don't know if anybody's announced that. uh, Top Step still running at around $50 for the 50K. Chris, are you still trading through funded FX? Yeah, my funded FX. They have a future site now as well. My funded futures. They were having a sale on it the other day. Lily was having a sale. Right now, everybody's having a sale on something, but I know Apex has got its 90% off sale. So, uh, yeah, I'll do my best. I'm one of those that because I can't go down into a 30-minute chart on my a 30-second chart on my trading view. Um, so the best I can do is go down to like a 1 minute chart after you see it. So if we go to the NQ, because technically the NQ right here would be the 15-minute chart. You went up. So basically what you're looking for is you got buy side liquidity, right? Let's call this buy side liquidity. I know it probably should be up here, but let's call this buy side liquidity. And you're waiting for price on a 15-minute chart to push up into buy side liquidity or sell side, depending on which way you're looking. We'll even do one down here too. I'll even go in and show you that too. And as soon as it does that, you're not jumping into a 30-second chart and trying to sell it. You're waiting for the first down close candle on a 15-minute chart. So I think that's where a lot of people get confused, and that where it's like explained very little is that when the 15-minute candle closes, T-Trades does a really good job of explaining it pretty good. But when the 15-minute candle closes above the higher time frame liquidity, you are still waiting for a 15-minute candle to then close down. It doesn't have to be below this candle. It just has to be a down close candle. So on my chart, it needs to be something green. And we get it right there on that candle. So when this candle comes in, this is when you go into, once this candle closes like that, you go into a 30-second chart. I'm going to go into a 1 minute chart. Right. So, and you are looking for that displacement. Technically, you kind of missed it right there, but that doesn't mean you can't take a trade here in just a second. You can wait for the next one, which I mean, with this straight line, yeah, T Trade's video does a really good job. Liquidity, I think, is going to bring this back up a little bit, and then we're going to see another displacement down. There you go. Now you're going to look for another displacement to the downside. There you go. So now this is where you want to enter the trade at. And again, this is on a 1 minute chart, so it's not like this is not a perfect setting for the Cameron trade. And basically, you're looking for 12 points or 10 points. I think he says 10. I think ICT says 10. T Trade says it's a 1-to-1. To me, I just think it's whatever your risk tolerance is. So, ICT is willing to give up 2 extra points in risk to make the 10 he's looking for, which I completely understand and get it. So the next trade, now we're in it. And there's your 10 points. So, I mean, that's literally it. And honestly, if you go back to like the very first videos of ICT that you watched, I mean, there's really nothing different about this man's strategies. And I say strategies, but the way he reads the markets and trades off of them. So, like, this is something he taught in, the very beginning, where price goes up, we take out some liquidity, and then you look for that inefficiency break to the downside. And this is what he's teaching his son. So again, if you had gotten like FOMO, because when we first dropped into a 1 minute chart from the 15-minute chart, we had that inefficiency right here. And it had already tapped. And you're like, oh crap, I'm gonna miss this trade. And you just can't be like that, right? You just have to like, nope, stick to the plan. This is the way it's gonna be. I'm not gonna jump into it. On that one, you would have probably been scared you're gonna miss the boat. But to me, go back to what the market is doing here. Like, we are building that liquidity to the top side. Like, that is liquidity, just like this. What happened? Price ended up jumping back into it in that way. All right, we have all this liquidity that's built up, good inefficiency down below it. There's more reason for price to come down if you just wait for the right moment to jump in. And then, because if you had have gotten in a little early right here, bang, bang, like, you'd have been really upset with yourself. Would you have been out of the trade? Probably not, but look at the drawdown you're in. Then comes your fair value gap. And your reason to get in now. Price goes in. And then pretty quick to the downside. And honestly, waiting for this trade to set up is way better than having to go through all of this management, right? This right here, even if you got in here, you're looking good, but this is a grind. Look how quickly it dropped here. So, and that's really it, man. That's the Cameron trade. 15-minute chart or a higher time frame like that, and you wait for buy side liquidity to be taken out, and then you wait for, once you see it taken out, the next thing you have to wait for is that down close candle. I mean, it's a practice in patience. So even if we go, let's go here. Yeah, Chris linked it right here in the chat. Yeah, he does a really good job of talking about it. So on the other side of things, this is your sell side liquidity on a higher time frame. I mean, I wouldn't necessarily call that perfect sell side liquidity, but it can be. And we know in hindsight that it does go north from here. But once you see price take it out, now we're looking for an up close candle. Yeah. Yeah, he is, Chris. He's actually done a lot of revamping of a lot of his videos. And the reason being is the YouTube algorithm is you have to have like 8 minutes of a video in order for it to be like monetarily pleasing, I think. So like all of his videos were like 4 and 5 minutes long. So he's gone into those 4 and 5 minutes and stretched them now to 8 to 12. Which don't get me wrong, I mean it's not like it's fluff. Like he does a lot of good examples and stuff like that, and I'll continue to recommend him. In fact, I recommended him to Pat the other day. So, but we get this down close candle. Now we're looking for an up close candle. We have to have an up close candle before we are even considering. All right, so here we are, up close candle. Let's drop into a 1 minute chart. Wait a minute, let's back up to a 15-minute chart. First up close candle. There you go. I don't know if I would have trusted this one as much, but you stick to the plan. Yeah. Good job, Pat. Yeah, but I love Guy, man. He's good. Like there's no reason to reinvent it if it's out there. I don't think so, Chris. So if you drop in here, you're waiting for displacement. Now after that up close candle, there you go. Now you have your reason to get in. Right. So you're going long here. You're gonna have a 12-point stop. Gives you more than enough room. And then a 10-point bag. So I mean, all this looks perfect, right? We got the weekly above us right there. And clearly, if we're breaking down below this liquidity, it's over. So we're in some down movement and then bang. And really the 15-minute thing. So it really just gives you this patience because once we, and this is something that has been hard on me in trading, is once we break into liquidity, we expect this to be the move, right? To just take us all the way back out. But usually, once we break into some higher time liquidity, we have a period of consolidation. And if you go by the Cameron trade, it holds you, it makes you hold out for that consolidation by watching one more candle on a 15-minute chart. That's all it's doing. So, and then look at the timing of this. All right. Nice consolidation here. Push, you call that break of structure. You get that nice little deal. And then we consolidate into that and then slam higher. The other trade that we were just looking at that just happened, right? We had that consolidation that moved down, consolidation. Then we had this move back up. We get in and then it just slammed down. We had no more like it grinding motion, action, whatever. I mean, imagine if you got in here, your stop would have been 12. You would have still been in this trade, but look at that consolidation you're having to hold through. So that was the big question everybody was asking ICT is like, why are you risking 12 only to make 10? That doesn't make sense. It's not good for risk management. There is actually a Twitter space in which he goes on about that. Um, my thing with it is these types of trades. I guess there's a couple of reasons why it's not a big deal. One, these 12 handles put you below that anyways. These 12 handles here, the risk puts you below that anyways. If you're only 10 handles, then you're probably going to be right there at the bottom there, and you're going to need to, shift it a little bit anyways to get below that. 10 handles is one of those areas on the NQ where 10 is probably going to be pretty easy to get. If your analysis is here, then it's okay to kind of hold out for a little bit more risk. And you can monitor your risk by either trading on the NQ or even the micros. So if 12 and 10 is too much for you, in some way, then you can go to the micros and kind of manage that and see how that feels before then coming back to the minis. Yes, from what I know, this strategy has been obviously put to test on a lot of other instruments or whatever. I just know specifically the camera trade is used on the NQ. And it's because the reason you're using it on the NQ is because of these types of moves right here. Those types of moves you don't see too often on, well, I'll put it this way, as often on the ES like you do on the NQ. 10 points is way easier to come by than 5 or 7 on the ES. But yeah, that was a topic for debate, this 12 to 10 risk to reward. When it first started coming out, there was a lot of people that came on it. He got on Twitter. There was a Twitter space. I don't 100% know exactly which one. Somebody retweeted it. Let me see if I've actually got it. I don't think I do. Because I thought it was, it goes against popular advice, you know. No, it'll take me forever. If I do find that today, I'll put it up here. I'll put it in the Discord. But it basically just goes on. He even like says, he's like, yeah, you're risking 12 to win 10 points, and he stops and goes, oh, what did he just say? In that classic ICT smartass type of talk. What did he just say? Did he just say he's risking more than he's trying to make? That's absolutely insane. That's absolutely nuts. And then he kind of goes on to explain like why. And I mean, to me, I've done that too, where I've actually not even had a stop loss because there's no news happening or whatever. And I trust the analysis that I've made. Now, I don't recommend that by any means. It's just, when if you've done it for long enough and you kind of see a pattern that's forming that you trust, then you can give yourself a little bit more room. And if you get stopped out here, then you're just stopped out, right? You were going to be wrong anyways. Didn't matter if it was 10 points or 12 points. You were going to be wrong anyways. So, but those are two real good examples from yesterday of that Cameron trade hitting into some higher time frame liquidity. Now, why this liquidity as opposed to, waiting for it to come down to this or whatever? I would think this structure had something to do with it. And, obviously this junk right here This area right here had something to do with it. Inefficiency right above that with structure that lines up perfectly with this right here. That's the median right there. And notice how it just kind of stops, right? So if you're pushing to try and get 20 out of it, then you're more than likely not going to make it. So that's 53, looking for 73, which is right up in here. Look at what you have to hold through. Let me zoom back in. This is another reason why he's like 10 points is just a good area to look for. I mean, when we did the ends trade and he was talking about 5 points, risking 4 points to make 5.25 is just over one. A lot of people went with a 5 and 5 1-to-1 on it, just because what's another $50 to make that $50 on top or whatever. But here, you had your scale right there. And your 10 points was here pretty easy. And then to make 20, you'd have to get up to here. So look at that pullback. Like, look at what you're holding through just to try and get that extra point or two. Yeah, absolutely, man. Yeah, this is not something that I'm sitting there go out there and do. When you're killing the market in a certain way, and then there's no reason to change, right? Like this is just another sell. Like, this is the way I put it. This is the way I see a lot of stuff out there. And a lot of the reasons why people end up kind of getting out of trading for the most part is they keep jumping around from strategy to strategy. Even if they're winning, they go and they try the new one and they lose some money on it. And then they go back to their old strategy and they push that strategy to make more. And then take it easy, Chris. Have a good one, man. Be safe. Thanks for being here, Bo. But I think that's one of the biggest issues people have, like in trading, is that they find success in a strategy, and they either get bored or they don't. Their consistency slows down a little bit, or they're risking more and they lose a couple of big trades, so they don't feel like their strategy is working the same again. So they go to another strategy that is the new popular, like piece of candy for the moment. And they find immediate success on one or two trades, and then they start losing because it's not what they're used to. It's a different way to look at the market. It's maybe even a completely different time frame. And candlesticks just look different on different time frames. So they don't read the market correctly. And then they start losing. And by the time they go back to their old strategy, which was consistent, it just kind of had some slowdown, which you're going to go through in trading all the time. They try and push that strategy to make up what they lost in, previously, by, over leveraging or, doing things that they normally wouldn't have done with that strategy. And then they're out, or then they're just, pissed off at the world. Nothing's working now, kind of thing. But that right there is where you finally would have hit 20 points. So you're in 10 points here and out, right? Right there within roughly 10 minutes. That's maybe 15, maybe a whole 15-minute candle. Let's go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 minutes. You're in and out of that trade for 10 points. And then look, I mean, that's more than what you were in that trade if you're holding for 20. Now, if you got two contracts on, you take one off here and you go break even on the other one, or just above break even on the other one. I mean, by all means, you can play with it however you want to. But I just know that getting in and out getting all in and then getting all out without trailing out a lot of times becomes more profitable. So, but yeah, absolutely, Kyle. Stick to what's winning for you. Stick to what you're comfortable with. I'm not trading this. This is not a strategy that I'm using at all. I look for, I'm looking for structure that's like this, but not on the 1 minute chart. I'm really just playing on the 5 minute chart. So my structure lines come from the 15 minutes to 4 hours. That's where I get my structure and my analysis from. And then when, price gets these areas or whatever, I drop into the 5 minute to look for, this type of movement. So if you go to a 5 minute chart on this right here, I'm going to back this up to here, just to kind of show you what it looks like on a 5 minute chart. As you can see, these are the type of situations that I start looking for. We've got this nice candle right here. I like that wick. This candle that drops down. So I've got this little area right here that I like how price is reacting to, and we're not breaking a low. All right. So on a 5 minute chart with the Cameron strategy, you're probably already in and out. But with the way I'm trading, the most comfortable trading, I haven't even begun my trade yet. Right. I hope I have. That'd been nice. But, if I haven't gone ahead and gotten in because I like the pattern, then I'm probably looking for an entry right in here. Whether I get it or not. I mean, we know that we get a drop down and then a go. Right. So there you go. So these are the kind of patterns that I tend to start looking for when I'm on a 5 minute chart. This wasn't perfect, but if I get a good feeling on where we're at structurally and everything, then I can go ahead and enter. And I don't necessarily wait on a fair value gap or a break of structure or anything like that. I just, do analysis and feel as though the market's going to go to the upside. We got nice liquidity up here, inefficiency above it. We've come down and grabbed liquidity. We're right here at a structure line. All the reasons to go long. So, all right. Well, take a look at that T Trades video though, Kyle. If you just want to know a little bit more about it, and the risk when it comes to 12 and 10 or whatever, that can just be something, you can tweak that on your own. Again, it's up to anyone's risk tolerance. So, you can go like a 12-point stop and a 15-point winner, and look for 15 points and stuff like that. If you'd rather it be 1-to-1 or a little better than 1-to-1, that's the beauty of trading. Now I've gotten to the point now where I don't have to. I don't have to. If I'm down here and I see this pattern forming, we've got liquidity here. We've broken up and we slam back down, right? I like this as an order block, and then price comes down into it and we start consolidating, right? This area right here is my area of interest. And when I see a low being taken, right? So we've swept these lows right there, and then we get an immediate rejection off of it. I am in somewhere in this area, right? So whether I'm in here on that candle and I've got to hold through a little bit of some drawdown, my stop's going to be below that for sure. or whether I wait and see this candle break above that one and jump in here. I use the 5-minute chart for these patterns. So once I start seeing patterns like this, I get comfortable enough to go ahead and take the trades. But I've been doing it for a longer time. You know what I mean? Like experience comes in seeing the charts the way that I see them. Because I mean, look at this pattern, right? And then look at this pattern. It's the same thing. You know what I mean? Like it's literally a lot the same thing. This just happened over a longer period of time, where this one happened in a shorter period of time. And I can get I can get whatever point total I'm looking for, which I'd have been taking it back to this low, which would have been the midpoint of this candle right here. That would have been my target. So I would have been, you know what I mean? Like, it's hard to explain it. And that's the reason why I don't teach it that way, just because it just takes time. When you just start being able to read the market, because I've seen the market for so long, it's definitely repeatable. You see the same things happening over and over and over again. And when they do, you become more confident in taking those trades. So like even on this trade right here, let's just say I got in at the top of that candle. Look at how much I'm risking. And I want it to get right there. I mean, it's a 1.5 to 1, which is good, but look at how many points you're risking. So that's a large point. That's a large amount of points to be risking. I mean, you got to look at those. It's $20 a point. So I'm willing to give up 600 to make just over 8. Like that's a huge amount of risk. But if I do that on the micros, then that's a $60 risk to make 80. And I can get in for however many contracts I want. So that's one contract is $60 risk to make 80. If I'm in 5 contracts, well, now I'm in $300 risk to make 400. That's pretty manageable. And I can take partials on the way. So that's the reason why you see me trading the micros a whole lot more now than I ever did, because I can manage that so much better than I can on the regular NQ and ES. I can give myself the type of stop that I want on the time frame that I'm using. So short answer, no, I don't wait for an fair value gap. Long answer, everything I just said. But again, it really just comes down to being able to trade certain candles, right? And watching the market long enough to be able to see those patterns happening over and over. And that's the reason why, though, for the longest time, I didn't know why I was seeing those patterns over and over and over. And then when ICT, he was the first one that I ever heard anybody say that the market was algorithmic and it was computerized and there wasn't people moving the market. That's when I started realizing, wait a second. That has to be the reason why you're seeing similar patterns over and over and over again, and similar candlesticks, and what happens after those candlesticks. I was talking to y'all the other day about what I call the bucket candle, and what happens after that bucket candle, just like this guy right here. We don't get like a huge move afterwards, but a wick fill happens every time. If it forms at the right spot in the right area, then these wicks fill. So I can easily scalp that confidently. And that just comes with over time. Just watching the market over time. It doesn't need to be a bearish. It has to be a bullish candle, like this guy right here. And so we have pulled back into resistance. This price comes down, consolidation. We get this candle that you could have scalped. And then when this one closed, you could have done it again. You'd had to hold it a little bit, but that wick would have filled again. So these are candles that I will just eat up over time. If I'm able to sit and watch the market over time, those are candles that I could possibly just trade all day, every day. And on a micro account, like if I'm in the micro NQ, I can put 20, 30 contracts in and like scalp that all the way up. Which is stupid. I know it's crazy to say, but that's what happens over time when you just start, when you trade a lot, you know. Hey, no problem, Kyle. Thank you, buddy. You have a good day. I guess Pat, man, that's probably gonna be it. Look at this. It's been dropped all the way down since I've been ranting. Look at that move.
Hey, thanks for all the good explanation. I appreciate it.
Hey, not a problem, man. I try to do my best when it comes to that because I know how confusing this can be. And that was, a lot of my knowledge is self-taught and then confirmed over the years from other people. You know what I mean? Like,
Yeah.
so that's,
Well, it sounds like God has given you the ability to recognize these patterns.
yeah. Over time, now being able to be patient enough to play them consistently is, I mean, that's really the game. Which is one reason why I do, when I first started seeing the Cameron trading strategy, I was kind of like, nah, that's no good, man. You're telling people to go to a 30-second chart to take trades. I mean, like that's if you've never traded on the 30-second chart, it's quick. Like I was like, nah, that's no good. But when you really do a deep dive into it and you realize that you're waiting for that down close candle and then you go in after that down close candle, it does happen quick, but it's usually pretty profitable. Like you're either going to win or lose that fast. And again, my issue with that strategy over time is if trading can feel like gambling. No, it's not gambling, but it can feel like gambling. And you know that when you take a win, you want another win. And if you took that win in 3 minutes, maybe that doesn't satisfy that appetite. And if you've got another hour to sit at the charts and you just had a great win, and you just made $200, well, I'm going to wait for that next win. You know what I mean? Like I'm not going to be able to cut my chart off because that just didn't satisfy the appetite. So that's where I feel like trading and gambling can be very similar is if you start getting into strategies that are super fast, that you make your money very quickly, that it might not be satisfying. Even it might be the greatest win you've ever taken. It might be the largest win you've ever taken. And for a few trades, you might be able to turn the charts off and walk away. But there's going to come that day when you make $500 on a trade and you're going to want to make $500 again because that first trade took you 2 minutes. And then you're going to give back and give back and give back. I mean, I've been down that road myself. So
been there too.
Yeah. So I like the trades that take a little bit longer to play out. So
my first training was with an outfit that, preached that you could make thousands on every trade.
Oh yeah.
So when I finally actually did a trade and I was up $275, I thought, well, I'm hanging on. Well, then I ended up losing 500 or something.
Right. Exactly. And I mean, and there's a guy out there, his name's Mike, Investor's Domain is his YouTube channel, and he's a signal caller, and he's very good at what he does. And he reads patterns. He doesn't necessarily have like a one set strategy, like an order block or a fair value gap or whatever. Like he just says it's time to go. And he's very good at it. Like he'll take $300 and turn it into $1 million, quote unquote, in very little time.
Mm-hmm.
So, and it's one of those things like, I mean, clearly it's possible because he's showing every single trade he takes. He shows everything. So, I mean, and these trades are winning trades. And it's one of those things like you could take $300 to $1 million, but at the same time, why? Why would you put yourself under that type of stress and need and whatever when you can take $300 and make $50 and then make $100 and then obviously compound it, but not try and make $30,000 on a trade?
Right. Right.
Because, there's a couple of times like when he first
Oh.
started doing that, I thought, wow, that's pretty realistic because you could take $300,
Mm-hmm.
trade the NQ or the ES until you made it to a certain point, and then go to the US 30 or the Dow,
Mm-hmm.
and which is more lucrative and fast. And if you continue to maintain those same trades, then yeah, I mean
Mm-hmm.
you could do that. But man, the risk on that.
Yeah, that's what I was taught. So I waited for, the best trade of the month. I stayed in it way too long.
Mm,
I sat down with the coaches and they would say, well, we don't know why you're losing.
right. Wow.
And
Wow.
I would think, well, heck, I know why I'm losing. Why don't
Yeah.
you guys know?
Right. I can easily see why I'm losing. Yeah. And that's the thing. Like everybody will tell you, like, you can hold for this long and do all this. Look at what we've done when they're really just chopping it up, right?
Yeah.
They're using way more contracts and taking out a whole bunch of partials along the way. So, and then they're
Well,
saying they're holding it or whatever, but they've already made their profit.
yeah, what I came to find out with this first outfit was they weren't actually making money.
Oh, well, they were, but it was your money.
Well, that's right. They were charging me for classes and stuff, but they were not, they were not showing me their trading accounts.
Right.
And when I finally got to see them, I realized, doggone, they're as bad as I am.
Right. Exactly. Yeah. And that's the thing. Like, I'm again, everybody's like, well, you do this and you're good at it or whatever. I was like, I'm still a middle school teacher. Like,
Mm-hmm.
there's there's a line, there's clearly I'm not
Yeah.
buying cars with the amount that I'm making off of trading, you know.
Right.
So like I can read the market, and I feel like if I didn't have if I could read the market right now at 26 years old, the way I read the market right now,
Mm-hmm.
and my responsibilities were, you know, astronomically smaller,
Mm-hmm.
I would definitely jump out of whatever I was doing and try and do that full time.
Yeah.
But that's not realistic for my life.
Yeah.
So it's one of those things where I'll just keep plugging along, taking some small trades here and there, and paying a car note.
Well, and I'm at the other end, Joey, because I'm retired. I'm almost 70. I do not want to spend all day in front of the machine
Absolutely.
and keep watching trades and all that stuff. I want to be able to turn it on, recognize something quickly, take the trade, and leave.
Yeah.
So in a way, I want to be like you.
Yeah. I mean, and I'm telling you that I have never traded better than I have since school has started.
Mm-hmm.
And that's not a joke. Like, I have never traded better. And it's because I literally look at the market 2 to 3 days a week, and I take trades 2 to 3 times a week. Like, I mean, it's that small of an amount. And I feel horrible because I'm not as active in Discord, and I'm not as, sometimes I don't run the room or whatever. So like, I feel like, man, I should be doing that. But when I was doing that, I put so much pressure on myself to produce. Like,
Mm-hmm.
I need to take a trade. I got to show that I'm doing this and blah, blah. And it just, I wasn't doing any good. Like, I was, not even a break even trader. Like,
Uh-huh.
I'd take some really good trades, but then I'd take some really hard hits. And it was a lot of the times was because I was trying to trade too many times.
Yeah.
So when I learned to stop trading and go to a smaller amount of time to trade and lessen the amount of days that I'm doing it and the amount of time I'm in front of it, I became better because like you said, you look for that particular thing. Like I looked for those particular patterns on a 5-minute chart. If it's there, I'll take the trade. And then I try and keep myself from being greedy too. Like, man, I tell you what, my target's here, but the weekly's right there.
Right.
I could probably hold out. And then there you go. You're giving back, that
Yeah.
profit that if you had gotten out and turned everything off. And I've gotten way better at just taking those, smaller points. Like instead of holding for 50, I'm taking it at 25 and 30.
Yeah.
So
That's good teaching.
yeah,
Do you have time for a quick question?
sure. Yeah, go ahead.
If maybe it's not quick. By
That's okay.
video 5, I keep hearing the term PD array,
Yeah.
but he's never explained it, or
Yeah.
if he did, I missed it.
Yeah, that's so basically that's just a buy side liquidity line or a sell side liquidity line or structure or so a PD array is like a higher time frame buy side liquidity. So this line right here is a PD array. And basically, what does PD stand for?
Price displacement, maybe?
Uh
No.
no, I can't remember. Premium discount.
Oh, okay.
Premium discount. So it doesn't matter. So PD, it can be premium and it could also be discount. It's just the array, like it's that line.
Okay.
Yeah, that's all it is.
All right, that helps.
Yes, sir. Yeah, and that's and it'll happen like their PD arrays might be the 50% of that order block. It doesn't have to be buy side or sell side.
Uh-huh.
It's just a higher time frame, area of interest, point of interest is all it is.
Okay, yeah, great. I appreciate that.
Yeah, no problem. And I think we'd have to go back quite a bit, but I want to say somebody uploaded. Let me
Well,
see. We've got a list of terms somewhere because a lot of those kept coming up. A lot of it was because Toshie, she was struggling with terms because we'd have a new word and she'd miss a couple of days and then she'd come back in and we'd be talking about this new word. And she was like, what in the world are y'all talking about?
yeah.
So
Well, that's my experience so far too. Every time I come on, I hear something new.
yeah.
Now
Yeah.
it's
And
getting less.
I'll try and look up that picture of where all of the terms, their ICT terms basically,
Uh-huh.
and I'll try and post it again for you.
Okay.
If not, I'll send it to you in a message. I
Okay.
know it's here somewhere.
I'm doing okay because it's so relatable to what I've been taught all along.
Isn't it?
Yeah. So it's like, that's what they mean by S curves. You know,
Yeah.
and
It's
and,
it,
and
it,
yeah, I've noticed that, pivots don't always pivot. They
nope.
consolidate often.
Yep. Yep.
And then they finally go, just like we
Yep.
were talking about today.
Yeah. And that was one of the big things, like these Monday highs and lows and this
Mhm.
median. Like it's, every now and then, you will get this little bounce and
Oh yeah.
go, but we're on a 15-minute chart, right? So if you
Hmm.
jump into a smaller time frame, you'll notice that when it gets here, it slows down and then starts to go.
Right.
So it respects the higher time frame, but on a lower time frame, you get that drawn out consolidation that you have to wait for.
Mm-hmm.
And but yeah, it's even at all pivots, I mean, look at this daily line right here. It just keeps playing with, right?
Right.
Even the moving average, it keeps playing with it before it eventually does break down. And when it does break down, that's when you can go in and find, okay, there's the displacement. Here's my reason for entering.
Hmm.
So
Yeah, good. And I was actually relieved to hear that you don't play the fair valued gaps, because it seems to me your brain has to work really fast to see those,
it does.
analyze them, and then be ready.
Well, and not only that, but if we go into this guy right here
Mm-hmm.
and drop into that 1 minute chart for that fair value gap, right?
Mm-hmm.
So I don't set limit trades. And the reason I don't set limit trades is if you saw Chris's trade from yesterday in the trade room.
I didn't. Sorry.
All right. Well, his trade, let me see if I can pull it up.
Oh,
I'll just
I
show it to
I
you real
can
quick.
find it.
Here, it's right here. So he's got a limit trade set right there.
Ah.
And it's
Uh-huh.
because of that fair value gap, right? Which is a good setup. This is a great setup. In this small of a context, that is a great setup. But if you go into the chart, he took this long trade at the top. So even though it looks really nice and he's getting this nice setup, it was an extended move that he was almost trying to grab and go further. And nothing on him. Like I said, like if you look at that trade, it's a good looking setup. But he
Mhm.
set a limit order and this thing just kept slamming down. So he ended up losing on that trade. And I think it was let me find it. I think it was this one right here. It was right here. This is
Oh
where it
dear.
was.
Mm-hmm.
Yeah. So and it was on a 5 minute chart. And on a 5 minute chart, there was maybe it was, yeah, I'm almost positive it was right here. So there was a run up. I can't remember. But anyways,
Mm-hmm.
it slammed against him and he ended up losing on that trade because um, it was just such an extended move. So again, I think that's the reason why one, I don't set limit trades, but two, you have to really pay attention to structure and where you're at.
Mm-hmm.
So, but anyways, back to what I was saying. What was I saying? I didn't forgot now. Dang it. Got on.
Well, we were going through PD arrays and all that stuff, but I've taken up enough of your time. I
Oh,
appreciate it.
okay. Yeah.
My family vacation starts tomorrow, so I may not be with you for a week or so.
Hey, not a problem. Tomorrow, I won't be here
Oh, perfect.
because I'm laying blocks with my father tomorrow. So we
Oh,
will be
good for
leaving at
you.
about 5:30 in the morning. So yeah. So I won't have time to get the room going and start it up, but I will definitely be here. Um, I will try at Thursday. I'm probably gonna be laying blocks again, but I
Uh-huh.
will try and I'm thinking about getting on a little bit earlier on Thursday, like 4:45 to about 5:15, and that
Uh-huh.
way I can at least do a rundown of the market. Even if it's not live, I can throw
Yeah.
it into the chat.
Yeah. Bless you. I appreciate what you do.
Well, I appreciate it, man.
Okay.
All right.
You must have some Italian blood if you're laying block.
Actually, I think we're complete Irish, but I don't know. My grandfather got into land a long time ago when he was a young guy, and he
Uh-huh.
started in brick and then turned over to block, and my father did it the minus 10 years of my young life.
Uh,
So he was laying blocks, and then he went to the sheriff's office for a little while in the 80s when the economy kind of went bad,
uh,
and then he got back into it in the mid 90s, and he can't get away from it now. So
and
so
he's
my teenage years and through most of my young adult life has been nothing but slinging the blocks around. So
uh-huh. You must
it's
have
one of
good
those jobs
support.
where you definitely earn what you've made,
Oh yeah.
and you get that sense of accomplishment at the end of the day. But it's
Hmm.
very physically exhausting. So
Yeah. Yeah. Amen.
yeah.
My lines don't usually come out straight. That's another thing. Anyhow, good talking to you.
You too, man. Have a good rest of the day, Bo.